he's going to be here or not. So we'll go ahead and move on to item number 3. Number 1, dental and vision insurance premium cost share options. Danielle?
Good evening, Mayor and Council. This is a request for the Mayor and Council to provide direction regarding the employer cost share for employee dental and vision insurance premiums for the upcoming benefit plan year. Specifically, Council is asked to determine whether the city will fund 100% of employee premiums or maintain a 90-10 employer-employee split. As part of the upcoming benefit plan year, staff is seeking council direction on the appropriate cost share for employee dental and vision insurance premiums. Staff has prepared cost comparisons for both options, 90-10 and 100-0, to ensure council can make an informed decision that aligns with budget priorities and supports employee compensation and benefit plans. The additional cost to fund dental insurance at 100-0 employer-employee split is $31.7 thousand. The additional cost to fund the vision at 100-0 split, reflecting an 8.7% premium increase, is 5,600. And I realized I didn't have the total cost in my council communication form. So as of right now, we are paying $158,000 for dental. So if you add if you go to 100-0 split and add the 31.7, that's a total of $190,000 for dental. And for vision, we pay $26,000 per year. And if you add the 5,600, that is $31,600 for vision. So staff requests that the mayor and council provide direction and vote on whether the city will cover 100% of employee dental and vision insurance premiums or continue with the 90-10 cost share for the upcoming plan year. And with that, I'll stand for questions.
Danielle, are those numbers if just the employee, if we just pay the employee, what are these totals that you're giving us?
So mayor, council, this is with what current elections are. Is that correct?
So we don't know how much this will go up if we add families and everything to this.
That is correct. So we don't know what employees are going to choose, so we just did the estimate at what employees are currently electing for their tiers.
Do you have a worst case scenario of what the max could possibly be if they signed up?
No, not at this time.
Thank you.
Mayor, just a quick comment. This is partly necessary because of me, so my apologies for not including that in my motion when we did the original insurance.
So you still don't know the total effect even on this.
Right. It's hard to predict what employees are going to choose as far as their tier. I mean, that can change during open enrollment. That can also change during, like, if they have a qualifying event throughout the year. And so estimates have been done off of current elections.
On the one we decided last time, it was brought, and I thought you and I had a conversation that you said someone had brought it to you, the 100% to be put on the agenda. Who was that?
Mayor, council, so originally my presentation was at a 90-10 split, but yes, we did have a request from council to go ahead and add the 100-0 coverage, and so that was adjusted when we submitted the presentation.
So
It was a
we don't have a name for the public.
Oh, no.
Who brought it to the agenda?
Mayor, in a visit with Mr. Bingham, I mentioned the 100-0 as an option,
To have it brought on the agenda.
along with the 90-10.
I just wanted to know
Yes.
so I could answer when people ask me.
Yes, that was me.
Yes, thank you, sir. So we just kind of don't know the total effect yet, and kind of with it.
Mayor, council, I can tell you the number that are on the plan. It might help. So for instance, we have, on the dental plan, we have 144 subscribers. And on the eye, we have 137. So I don't know how much us going from 90-10 to 100 really changes the family dynamic in a household. mean, it's possible we might have some that change the tier that they choose based on the cost, but really a lot of the tiers that are chosen are based on an employee's family dynamic.
I just wish I had something I could answer somebody out in the public better than that, because if that's the answer I use, they're gonna ask me again. So you think we might know something else, especially on the other one? Before, well, that one's been voted on already because you had to notify Ragged.
Mhm.
But will we know better numbers before budget vote?
Um, Mayor, Council, so open enrollment starts April 27th, so I do need this vote. I had to request an extension with Raggett to be able to get, for us to clarify the dental and vision, so I do need a vote on this so we can get it going for open enrollment. Open enrollment starts April 27th, but until open enrollment starts and is completed, which it usually runs for 3 to 4 weeks, we won't have any idea as far as the impact.
I don't know how it affects total compensation in the long run.
But you did say you could ask for an extension of time.
Mayor, council, tonight is the extension. So the decisions as far as what we were going to pay for health, dental, and vision were due March 30th. But because we weren't sure on the vote as far as dental vision, I did request an extension with Raggett to bring it back so we could get a clarification on the dental and vision.
Mayor, I move that we approve the dental and vision insurance premium cost share option at 100% for dental and vision.
Second.
Is it just direction?
It's an action item for a vote, Vice Mayor.
Mayor? The copy I provided, the scripted agenda I provide the council, I did notice I left direction on there, but the actual agenda that's posted does say action.
The one you posted says action,
Yes, sir.
so we're good with the public.
Yes, sir.
Okay, well, we have a motion and a second, right? For 100%. All in favor? Opposed? Okay. So it stays at the 90-10, right? And we'll move on to item number 4. Presentation of the fiscal year 2025 annual comprehensive financial report. Troy?
Well, let me cancel so B can, our auditor is online with us. He's currently not available to be in Safford, but he did volunteer to come on Teams. So let me turn this off really quick. It's giving me all sorts of fits. There it goes. Why is it? Come on. There it goes. All right. Michael Lazan from Heinfeld Meach has performed the fiscal year 2025 audit and is here tonight to present to you the findings and necessary guidance that the auditor has to give with council. So I will turn the time over to him. We're not going to really go over the numbers inside the CAFR. We can do that at a different time. This is just to get this compliance requirement out of the way, that we have finished the 2025. It has the audited financials in front of you. I just wanted to point out the front cover. I thought you guys would enjoy that. I found those pictures from, I didn't find them, they were brought to me, that 1920 and 1950 Safford picture from the sky. So you can see what was here back in the 1920s and 1950s. So I hope you enjoy that. I really liked it. I want to put it on there. I thought some of you would like that. So with that in mind, I will turn the time over to Michael and let him do his portion. And if you have any questions, we're both here to answer any questions. Michael?
All right, thank you, Troy. I appreciate that. As Troy said, my name is Michael Lazan. I'm the audit partner with Heinfeld Meach. Special thank you to the mayor and the council for having me here tonight. I'm here to present the results of the audit report. I also want to thank Troy and his staff as well, and all the different departments we work with at the city. We appreciate their help. And okay, I will jump in and go ahead and walk through the report. Troy, do you have my presentation, or should I try and share it?
We want you to try to share. If you can, I can have your
Okay.
presentation.
Okay, nope, I got it right here. Can you all see that?
Yep.
Okay, perfect. All right. Get started. Can you see that?
Can you make it a little bigger?
That may have gone. Actually, let me just go back to this. Does that work?
I don't know what changed. We can see it off to the side. I can also see a small box below.
Okay. I can try to.
I think if you can move through it, we can see it enough to see what's going on. There's
Okay.
not a
What
lot
I can
complex.
do, yeah. Okay, let me see if I can switch the screen that I'm sharing. Just give me 1 second. Sorry, guys.
There.
Okay.
Yeah.
There we go. Thank you. Okay. Okay, we'll go ahead and jump in. I took this picture from the website. So part of the team that we had there on site was myself. I was out there for preliminary field work. James Shanklin, who was the audit manager on the engagement, and then Nolan Cook as well. He was the lead and the main contact. And so why are we here tonight? The audit is required not only by city charter, but also by state statute. And there is an Arizona revised statute which requires that we present the audit results and any findings to council in a regular meeting without the use of a consent agenda within 90 days of audit completion. In addition, the ACFR, the Annual Comprehensive Financial Report, must be posted online, and at least 5 years of the reports. 5 years of the reports are required to be posted. So what's the importance of the audit? We're here to verify that management representations regarding finances are correct, materially correct, and we'll talk about how we give our opinion. You're also demonstrating stewardship and accountability to not only your citizens, to council, to grantors, federal and state agencies, bondholders, IRS creditors, et cetera. We're also reviewing compliance with laws and regulations. We'll talk about some of the different reports that we issue that have to demonstrate that compliance. And ultimately, it's for the governing body to ensure that it's remaining to ensure that management is fulfilling its responsibility as well. So the audit process, as far as how it goes, planning started in June of 2025, and we had site visits in July and in November. Our July site visit was primarily focused on internal controls, testing transactions, and the November field work is mainly focused on substantive test work of the numbers within the financial statements themselves. And in addition, we conducted follow-up remotely, and then we also utilized secure portals to share the information that we requested. And then the annual comprehensive financial report was issued on March 31st of 2026. As far as audit methodology, I won't spend too much time on this, but just ensuring that we're trying to ensure that the numbers we receive, the information we get from management, from the finance office, can be supported. So we're verifying that cash is accurate, revenue expenditures are supported, debt is reported accurately, and we're also looking at what's called the schedule of expenditures of federal awards that city staff prepare to look and see if the city qualifies for what's called a single audit. So if you receive more than $750,000 in federal awards, you're required to have this extra audit done that has to do with compliance over federal dollars. And so previously, fiscal year 24, Safford was not a single audit, but then in fiscal year 25, it became a single audit based on some of the grants that we'll talk about later on that we tested. And the reports that we issued, so we do a fair amount of work. We issue the annual comprehensive financial report, the examination on compliance with highway user revenue fund money, the annual expenditure limitations, the agreed upon procedures related to the ADEQ landfill requirements, and then finally the single audit report itself, which I just talked about. And as far as due dates go, The ACFR is typically due by December 31st. However, extensions were granted, and this was primarily because the city was in the process of getting a landfill study done, and because that didn't come in until later in the audit process, and we ended up having to review it and analyze it because there ended up being a decrease in the long-term liability related to the landfill. The report ended up being delayed slightly. But all the reports were completed by March 31st and submitted to the required agencies. As far as the annual comprehensive financial report goes, the city received what's called an unmodified opinion. This is the highest opinion we can give. This is not a statement on perfection. We are saying the financial statements are materially free from misstatement due to error or fraud. And we always like to add a catch-all, is that the purpose of a financial audit is not to catch fraud, but rather to review the material amounts on the financial statements and to ensure compliance with state and federal requirements. Now, we did have some findings, which we are going to talk about later in the presentation. Like I said, we're not giving an opinion on internal control, but we're required to report any findings that we consider to be material weaknesses or significant deficiencies. One thing to note for fiscal year 25 is there was a new governmental accounting standard that was released that the city had to implement, which is GASB 101. And this related to compensated absences and the way you report them and how much of a liability you have to accrue related to them. And the good news, like we said, it was issued in time to receive the GFOA submission, or to apply for the GFOA Certificate of Achievement of Excellence in Financial Reporting, which the city did receive the award for their fiscal year 24 ACFR, and we anticipate that they will also receive the award for their fiscal year 25 one as well. So the findings we can talk about in more detail if you'd like. I'm going to give a brief summary here, and then I'd be happy to answer any questions related to them. The first finding we had to do with accounting records and financial reporting. We had some audit adjustments related to the closeout to ensure that assets and liabilities were reported correctly. And this was a repeat finding from the prior year. The second finding had to do with information technology and some of the policies and access controls that were not corrected from the previous year as well. This was also a repeat finding. And just so you know, part of the repeat finding has to also do with the fact that for all three of these findings, actually, the audit report was done, again, in the prior year, was issued in March of 2025. So really, the city only had 3 months to implement corrective action to get some of these items taken care of for the next audit. So hopefully, if we can get these audits done a little bit more timely, and as more time passes since the original findings, the city is able to implement some corrective actions. And in fact, for the next finding, FS 2025-003, capital assets, we had actually a larger material weakness finding in the prior year, and that got reduced this year to a significant deficiency because improvements were made having to do with capital assets and the way that those amounts are being tracked. So there was definitely some improvement noted there. As far as the next audit we'll talk about is single audit. This is, again, because the city receives and expends more than $750,000 in federal awards. So the city qualifies as a high-risk audit because if you were not a single audit in the prior year, but then you became a single audit in the current year, you're designated as a high-risk audit automatically by the federal government. So we're required to test at least 40% of your federal awards. And so we tested the following programs: the Airport Improvement Program, Assistance Listing Number 20.106, and the Small Community Air Service Development Program 20.930. Total federal expenditures of about $1.9 million. And those two grants added up together represent about $1.4 million of that $1.9 million. So those two grants in themselves are the largest portion of what's recorded on the schedule of expenditures of federal awards. One thing to note is that we're required to give a compliance opinion on whether or not the city was in compliance with federal requirements. And so unfortunately, for both the Airport Improvement Program and the Small Community Air Service Development Program, we have to give what's called a modified opinion because the city was not in compliance with federal requirements. And I can go over that in some more detail, is that the city did not complete required reporting requirements for the airport improvement programs by submitting SF 270, SF 271, and SF 425 reports. And the city did not complete required reporting requirements for the Small Community Air Service Development Program by submitting the SF 425 reports. And so those are the findings we noted in that area. And that's the end of what I have to present today. But like I said, I'd be happy to stay on and answer any questions you might have. And I can stop sharing my screen if you want me to.
Sure.
Okay.
All of that information is, the single audit is in the back of the book. If you go to page 10, that's where those findings are in detail that he just talked about. If you have any questions, you can look at those. Outside of that, Mike and myself are here available for questions.
I have several.
Okay.
When should our audit begin? You said it began late. When should it begin?
It actually began on time. So we began the audit planning in June, which is typically what would be expected. And we were out visiting in July and November. So that would normally, for most entities that we work with, that would be enough time to get the audit completed and wrapped up by December 31st. But unfortunately, like I said, we had the issue with the landfill study, which delayed us being able to wrap up the report.
So with the issues that you've found, those are going to come up on this next audit also, correct? Because we only have 3 months
Potentially,
again.
yes. Potentially, yes. There are some steps that can be taken. And in fact, Troy and with his team has laid out some corrective action plans that they plan on putting in place, which you can see within the responses that he gave. And that starts on page 18. Yeah.
I saw that said a completion date of December of 2026, but that will be too late as that'll hit the next audit, correct?
That's correct. Most likely they will show up again.
Let me see. I've got some notes on my thing. Let me get to it. Oh, you guys just showed me how to get there, and now I've lost it. On page 14 for us,
Yep.
on ours,
Yep.
you say you've found 6 significant risks of material misstatement, but then I don't really see a whole lot. Like number 6 talks about the golf course. I see nothing in here. I read through this about a gazillion times, and I'm not seeing anything that explains that. So it did say you had significant risks of material misstatement. So I guess my first question is I wanted you to explain for us and for the public the difference between a significant and a material misstatement, and then if you could tell me about those 6 items that weren't addressed.
Yeah, I'm not sure.
Yeah, which
are you
page
looking,
number are you referring to? Because it's not 14.
Is that the communication
On
or governance
ours,
letter? Is
it
that
is
where you,
14.
So when you say yours,
I
what are you
think-
looking at? Page 4 of the.
Page 14? Is that what you said?
So she's in the ACFR page 4
She's in
On-
the,
on the single audit page 4.
she's on the one.
no, I
that
think
we-
Troy. I think she's in the communication, the governance letter that was
Okay.
sent.
So, yeah.
I'm opening that up right now. Let me get to that.
So the public doesn't have that document necessarily. They were attached as part of an item. It's not here tonight being presented.
Your presentation's different than the material we have.
Yeah, his presentation will be added to the minutes, but yes.
Okay, so I believe, yes, the 6 items you're talking about. So so what those 6 items are referring, I'll start with those 6 items first, and then I'll jump into talking about significant versus material misstatements, if that makes sense.
Yes.
Okay, so what we do is we are required to assess the risk of potential misstatement. We're not saying that these areas are misstated, but we're required to assess the risk of certain areas within the city with any client that we work with to ensure that any significant risk can be addressed and reviewed. And so the first two of them are actually required by auditing standards to be, and that you'll see that in every single client we work with, management override controls and improper revenue and recognition. Those two are required to be assessed. And then we have to ensure that management can overcome that risk, or we can overcome that risk through our test work. And then the next three we look at, we are specific to Safford because those are findings that we have noted, or in the case of capital assets and year-end accruals for assets, liabilities, revenues, and expenses. We also had an issue previously with timely cash reconciliation, so that had been a risk that carried over from a previous year. And then in the prior year, in fiscal year 24, there was a change in the way the city was reporting the golf course activity, rather than reporting the net of the ins and outs of what was being used by the golf course. The city elected to present the gross activity, so we had a large increase in revenue and a large increase in expense because we were reporting the gross, not the net activity, which I believe is more accurate way to report that information. And we added that as a risk because it was a new audit area that even the previous auditors had not tested. And then going into, oh, sorry, do you have a question?
Yeah.
Okay. So then going into the way we assess findings has to do with two variables. So we have a finding that if a finding is more likely than to repeat, which in that case, and we also have a concern with the materiality or the large amount reported within a finding. And so when we have a material weakness, we have both. We have both the likelihood of repeat and a material amount that had to be either adjusted or potentially was in error. With a significant deficiency, you typically have one of those, where you'll have either the likelihood of repeat, or it's a material amount that was potentially misstated or had to be corrected.
And then on page 139 of our presentation, I'm not sure what. Oh.
On what about the timely cash reconciliations? That signaled you something also.
Yes, and we did not have that finding in fiscal year 25.
We did have them outsourced to Cassell at once upon a time for 24. And then this time we actually have staff members that we hired in, I think, April last year. She took over and reconciled June and got us there. So we're still behind on cash reconciliations in general in fiscal year 26, but that's something for the auditors next year. So.
On the page 139, I don't know what that is in your book because it doesn't even give it to me. It talks about the scheduled revenues, expenditures, and changes in fund balances.
That's the CFA, okay?
I was
That's
just
page
wondering
7 in the book.
why is there such huge variances? So, like, we have charges for services original for the budget is showing 91,562, but
You're
then
talking
you
about
have an actual of 1.6 million, so that's a pretty huge variance.
So it's not the CFA that you're talking about. You're talking about the actual budget to actual reconciliation. It's a required footnote or required RSI to the report. That's on page, sorry, gotta get there. It's on page.
Page 94 of the act for
94, yeah.
Troy.
Thank you.
Yeah.
So yeah,
Yeah. Why exactly that got allocated that way, I'm not 100% sure.
I think that's
it could
on
be
me,
that.
Mike. I mean,
Okay.
it's just, there's certain types of activities that happen, like the golf course. We spend more at the golf course than we have in the budget, but generally in the overall general fund, we still are well beneath our budget. As you can see, we're 12,706. So really there is certain types of activities that do exceed, but there's certain types of activities that come in under. This is something that we could better do if we had budget to actual reconciliations more quarterly. We tried to get to that this last year, but my deputy, now that he's gone, that's not possible to keep up with that. But that's how we resolve that, is having those budget to actual reconciliations and giving those to you guys and staff on a timely basis. But yeah, So there is budget variance that's happening, but overall, the budget is still beneath the general fund budget.
You spent more at the golf course than was in the budget?
That does happen because the golf course has activities going on at it, meaning that there's certain things that will cost more during the year than they anticipated during the budget. So we just have to give supplementals to the golf course to help them get through because they have people that depend on their payroll to be made. So we do that to keep the Troon staff employed and working. We don't cut them off based on the budget, but we try to work with them on mitigating the amount of loss over the year. And we try to offset that against other parks and recreation programs we have at the city to make sure that we're overall under budget.
And that's a management procedural decision?
Correct. Happens, they request, we make the payments, and then we work through it throughout the rest of the year, supplementals, contingencies, things like that.
And there's not an amount that hits the budget that's over the budget that has to come to us for approval?
Not with that, no. Those don't reach that. I think our requirement that we have in policy is that if we're changing from the clerk's office to the golf course, yes, that would be a budgetary adjustment. But within the same type of activity, we kind of see that as the same. We break it up with more detail and we just present it as a lump sum. It's just parks and recreation, it's all together.
That it might be kind of like the 60,000, because we have a request this year to maybe look into 250,000 to allow that to go forward. So I thought maybe there was a requirement there too. Like the golf carts, for example, they were what, 300 and something thousand? And they weren't that much?
So they ended up leasing those rather than actually purchasing them outright. So, yeah, things are dynamic. They change constantly. But
Yeah.
yes, we try to work through that and keep ourselves under budget overall.
But you went over budget, okay.
Over budget in cultural and community and culture and recreation, yes.
My next question would be on page 196.
Probably just
If
tell
you
us
give
what
me
you're
a-
seeing.
It's just a few pages, 30-something pages from the 139. So I
Okay.
don't know the page. It doesn't tell us in here.
So what are you seeing?
I'm looking at the schedule of finding and question costs.
Okay.
Okay, so you're, okay.
So you're in
Yep,
the
I'm
CFA
with you.
now, okay?
So on here, you state, it says internal control over financial reporting. It says significant deficiencies identified, yes. Material
Yes,
weaknesses identified, yes. Non-compliant material to financial statements, no. How can you have a deficiency and a weakness, but not a non-compliant?
Because the compliance factor has to do with compliance with a state law or compliance with a federal law that materially affects the financial statements.
Okay,
And we don't have that.
okay, gotcha.
Yeah.
And
That's page
then
9 of the single audit.
my next one, I don't have your page. My page is 197. Same thing, schedule of findings. I'm at the bottom, the 4 bullet points.
It's
Okay.
first finding number 1.
Yep, I'm with you.
I'm just wanting to know, let me get my question. Hold on. Can you explain the origin of the 2.1 million cash variance that you identified in the general ledger? Did we have more, 2.1 more than we showed, or did we have 2.1 less? So
Yeah.
which way did that go?
I can't remember, Mike, but this is related to, we have pooled cash. We have one bank account and it separates over 22 different funds. So there was a variance when we showed this to the auditors. When they looked at the bank reconciliation that gets done on that one account, we were in balance. But overall cash compared to that one account, we were out of balance. So just a misreporting of a line. We fixed the line, we brought it in. This sounds worse than it really is. I think Mike can explain what they saw, I guess.
Yeah, I mean, Troy described it accurately. Basically, when we looked at, we do a comparison of overall cash that's recorded within the financial statements to the support that we have through the investment accounts, through the cash accounts. And we identified a variance, and then Troy was able to narrow that variance down to the fact that there was an issue with the pooled cash within that. I think it's called like a Bank One account. And so they ended up realizing that there was an issue there, and then they went back and had to re-reconcile, and then figured out that the variance, it corrected itself essentially. It was I don't think it was a misposting. It was just something with the system. It's an interesting system you guys have.
So yeah, it's taking like 250 lines and trying to compare them to one and trying to figure out where the difference is. So we found the one line, it was brought back in and it was fine.
So there's also a noted difference of 245,000. What was that?
So there's been an overall reconciliation of the pooled funds don't match that overall reconciliation. And that's just an ongoing thing that happens from year to year. Things get reported in the wrong information. So we've corrected that now to try to keep the pooled cash. That's part of the bank reconciliation process. So we are checking that more on a monthly basis to make sure that it's in balance. But yeah, that's just people put accidental entries into GL accounts that they shouldn't. And that's just cleaning that up, all that is. It's not cash disappearing. It's just bad entries in accounting that need to be gone through.
I did see that we don't have secondaries. So when something is being moved from a GL, something's being added, we don't have any secondary approval on that. And that looked like that was one of our findings.
So yeah, our journal entries, using a journal entry, we do have a process of submitting those in Laserfish for approval, but they noted that a few of those did not have that secondary approval. Sometimes we do so many journal entries that not all of them go through management, the management being myself and my deputy. So yes, there was a few that we need to get better at that process, but again, that's having staff to review. And then getting away from journal entries, they're one of those things that you don't want to go under the hood all the time and change the general ledger, let the system do the work. So we're trying to train staff on correctly using Cassell to do the work and getting the work done without journal entries, but we still suffer from staffing to try to keep that up, so.
Now, when this audit was done, you were at full staff and we still had John, correct? When all this had taken place?
Through November, yes,
Yes. So this was before staffing issues?
correct.
Because I noticed in the report it's saying due to a significant management change and staffing issues, but we did not have that at that point. We were fully staffed.
I think this is more of a closed meeting session that we probably would have that discussion, but I can explain that. But that's more of a closed meeting talk, and I'd have to announce all of my staff.
Oh, no, I'm not worried. I'm just,
But I mean,
Saying-
I know where you're going, but let's keep that to a closed meeting, and we'll do that when we have our budget, when we talk about my budget. And we can talk about that in more detail and give you that kind of specifics, so.
hold on, I have some follow-up questions. If someone else has a question, you can ask while I'm looking up my next one. I'm sorry.
Mayor, I have a question. I just want to know, the findings that we have, do they affect any of our federal funding?
No.
Okay, thank you.
Oh, yeah, that was one of my questions. I'm not sure about that because I did ask about that, and I was told that because we did not submit our reports for the federal funds, that we can be audited and have to pay back that $750,000, and that could put us where we don't qualify for any further grants.
Who was your source?
It was an auditor.
Okay. Do they do audits for the cities?
Yes, they do.
Here's our auditor. What does he have to say? Will we lose our funding, Mike?
If we're federally
I
audited.
no, typically not. Typically, they'll allow you to make corrections and to file reports late. It's not a guarantee, of course. I'm not the federal auditor. What they will do is they will take the findings and then they will follow up with the city for corrective actions. And typically, as long as the city has implemented the corrective actions and can show that the expenditures were for the program, and typically that also involves filing the reports, even though they're late, that can be done as well. And as long as the monies were used for a program that we used within the allowability for that program, which they were, we had no question cost. And so I'm not saying I'm not the auditor for the federal government, but yes, it is unlikely that they will take back the funds based on this.
Mayor? I have a question for Councilwoman Bratner. Just for the record, could you please provide a name or a company that you sourced this to?
No, thank you.
Okay, Mayor, for the record, she is not wanting to provide any information of who she's sharing the audit report with. Thank you.
Could she possibly provide that in the same closed session that they're going to have later?
Sure. That'd be appropriate, probably.
Okay. at the airport and the federal funds, is there any management override that caused us any problems there?
So that, I think
Not
that,
management.
sorry, Mike,
Sorry,
you
go ahead,
speak on
Troy.
your side.
Yeah, so from our perspective, it wasn't an issue of management override. It was an issue of the turnover with the airport and also a lack of understanding on the city side that these reports were required. So it wasn't a management override of controls. It was just lack of understanding and turnover.
So more words for that is, we had CNS was our previous engineer that handled our grants. We recently transitioned to Dibble, I think at the beginning of fiscal year 2025. But CNS was still administering the grants that they still started before Dibble took over. So that handoff wasn't as clean as it should have been from one contractor to the next. And then Dibble has worked with us on a process of making sure the city is responsible ultimately for grant reporting. It's not the responsibility of the contractor. So we were putting way too much on our contractors to be responsible for us. So it was nice when we had a general manager at the airport to actually do that. But we'll come up with a plan, and that's what the December 2025 plan is, to make sure that we have staff at the city that is responsible for reporting. Dibble can assist us, but ultimately we're responsible for the timing and the actual doing of the reports. So I think we've got that one corrected going forward, but
I don't remember if that was one of the problems the contractor had, and we had a rebid on some of the stuff there, but that's
no,
for later.
I think Dibble was clean. It's just that handoff between two contractors wasn't as clean as it should have been.
When were those reports due?
They're quarterly, so they were due, I think one was due in September or after September, and then the other ones were due, I think, annually. It was related to the airline service, so I think there was a report due in October. Cameron never did it. Our contractor never did it, so he eventually, did you finally get it, Mike? I don't know if you even got it. We still
No,
don't
we
got
haven't
it.
gotten it.
So we're still working on that with the new airport manager about reporting for that, so. And that's one of the findings, that's the fourth one that they had presented, so.
That's one of the findings that jumped out to me, was finding and question costs related to federal awards. Yes. So that kind of told me we having a problem there. So that's why I'm listening to some of the questions that have been brought.
So just to give you the history, it sounds worse than it is, but I've worked in government for 23 years, and I worked for a small county in rural Virginia where we were in charge of schools. I had over 200 findings because school teachers oftentimes got into grants and didn't comply with them. So you could have 200 findings, you still get federal audits. It's just part of the process. I think there's a reluctancy sometimes at the federal government to give grants to small communities because they don't have the staffing to keep up with it. And I think we're just a prime example of the staffing necessary to keep up with some of these grants. It got a little bit overwhelming for us. So I think we'll get back on track. We have a plan. We have some plans in the budget. That's why some of these can't be responded to immediately. I think the 2027 budget, we're trying to address some of these problems. And then hopefully this doesn't happen again. But findings, I mean, like I said, there was 200 in there. So they happen. It all depends on how in-depth your auditors get. But I mean, you can have 3, it's fine. We've had these 3, we're working on them. They show progress, like you said, and we're getting through them. So they just sound bad, I guess.
Yeah, it'll make you look.
So with the reporting, have you put together a plan on who is going to be checking in to make sure that those reports are getting corrected? Because I know that you have a
Yes, but
plan, but
during my budget process, let me go more in depth in that closed meeting session about how we're going to address that. So again, these are all the budget process. We'll answer them with new positions we're adding, but if there needs to be something more clarified, we can have a closed meeting session and talk about, but we have to notify those employees if we're going to talk about them. So
no, I'm just asking if we're going to be putting together like a compliance calendar so that we don't find ourselves in this mess again.
I think the staff member in my office has taken responsibility for getting those quarterly reports in. So we've done that, but I don't think it's a long-term solution. I think capital projects and grant projects are something that we need to talk about during the budget.
So Dibble
Dibble
is
will
not.
assist,
They're
not
going to
do.
assist with the reports, but they're not going to do them.
Correct. They put
Okay.
that on my staff member to do that. I don't know if that's a long-term solution.
Okay.
Did you allude to additional staff?
Possibly in my budget.
So additional staff, not maybe a third party to help us? I know at one time. one of the
I don't
council-
think these problems, like a consultant can come in and solve a problem and give you a solution. I think these are ongoing problems that just lack staffing that you have to have accountants that actually review these accounts, that report back to our auditors. I think that's part of our struggle, is we don't have that go-between layer. We have the work getting done on a day-to-day basis, but the audit sometimes we struggle with. And I think 2 additional staff members can address that, but we can talk about that more during my budget, so. Is there anything else for Mike
Uh,
or
I
me?
thought there was security issues too.
Are you talking the
Like,
IT related
yes,
audit?
yeah.
So he did point those out. There's issues with getting people closed out of Cassell. The threat is not that they've been closed out as an employee, they can't log in, but technically their password is still alive in the system. So if a city employee was able to log in as somebody else, they could still do stuff. And that's one of the things that my deputy finance director was responsible for, and he kind of lacked on getting that done. So
Because I thought IT just got questioned about security in different areas. Was this one of them that was?
yeah, so they also reviewed that same audit, and I think they needed to redo the same finding because that same audit that you're talking and alluding to from Forvis Mars kind of pointed out the same things that our auditors were pointing out. So both of them are on the same pages. There's still findings. Our fiscal year 2027 budget is going to address those findings. So
Because at the time IT was being questioned about that, I didn't know it referred to some of this. Shouldn't this be finance department to notify IT that this needs to be taken care of?
that part of it, yes, but there is still system issues that the IT needs to address, but there is a finance component where my staff needs to close people out of the financial system. So we have taken responsibility for that. It's just due to turnover in staff, we're now falling behind on that again.
With that, I know you're talking about staffing, but I did see like you bringing forward a lot of proposals for like the gas meters and things like that. Is that something we need to offload from you so that you can focus on doing this and put it back to the departments that should be doing it?
That's a good question. We can address that during the budgets. I don't think so, but sure, if you want.
So the letter that you wrote to send off that you're gonna correct these are also all addressed in the letter you sent off?
Yeah, so you do it through a clearinghouse. Mike submits the single audit. I go in and certify it, and the federal government gets it through that process. So that letter was all in that packet, correct, Mike?
That is correct. Yeah, the ACFR and the single audit report, along with the corrective action plans, were all uploaded to the Federal Clearinghouse, and they are available for public review.
And that was on the 31st of March, so we got that in. So
You are usually our auditor?
yes, he's been the auditor for the
2
last
years.
2.
Yep.
He has a 5-year contract, so he'll be the auditor for the next 3.
We'll get to know you better, Mike.
Well, we'll have to arrange something. I'll be out there again in July of this next year. We can sit down, and we typically select at least one board member, one council member to have a conversation with. But we're always happy to entertain a few more. So
Any more questions for me or Mike? We have a big night talking about market.
That's it, Troy.
Thanks.
Okay, then we're going to close the regular meeting and convene into a work session. On the work session, it'll be a budget work session, market review and presentation. Danielle?
Good evening, Mayor and Council. This presentation is to review the findings of the recent market review and provide Council with an overview of current comparison data. The city has completed a market review to assess how employee compensation compares to industry benchmarks. During the work session, staff will provide benchmark data points and answer any questions from Council to ensure a shared understanding of the city's current position in the market. This item is presented for Council review and discussion. No action is requested at this time. All right, so the first thing I want to point out is the handouts that I provided council. So this first one is our pay table. Um, I wanted to provide this so you guys had this to reference as we go through the market data. And basically what the pay table does is it shows how all of the positions fall on pay ranges, and it's a good visual as far as comparing all the different positions we have. The next 3 slides, you also have this printout. This is what I like to call the pay range step table, and so it breaks down all the pay ranges into 21 steps. And so there's a lot of times where I'll reference a pay range having a 20-year spread. That just means it's divided into 21 steps, and that's how we calculate years of experience for staff. So you do have that handout as well to reference. Before we dive into reviewing each of the positions, I wanted to see the direction council wanted to take. So I don't know if council wants to go through each position. It's kind of the same process for each position, or if you guys have questions on specific departments and positions. So however you'd like to go through the data, we can. If you have a preference, just let me know.
It doesn't quite give what I was asking for. I did ask to get more of a number of how many in each department this was going to be affecting. Like, is it going to affect everybody in customer service or just 1 or 2? So I was wanting more of a granular look, and we just received another overview. So is that something that you can provide to us?
I can. I didn't realize that was the request. It was my understanding that we had actually wanted to look at market data. Just off the top of my head, I can tell you I think there's 105 employees altogether that are up for a market increase. And then as far as COLA, all staff receives a cost of living adjustment, and then we had like 97 that were receiving merits. But if you want it broken down by department, I can certainly email those numbers to you guys if you'd like.
And then another point I had is, I believe in our last meeting when we talked about this, you had talked about how we would not be changing anything in the water department because we had already brought them up. But in this, it's showing we are increasing water department again on top of what we just did.
I think the only increase in the water department is the supervisors, and it's like 1%. And I don't believe that just because we're changing the pay range, I don't think it results in the employees actually getting an increase. But all the other positions, the ranges should have stayed the same. We can go to those slides if you'd like.
Well, that's what I was wondering, is how many would be receiving an increase in each department based off of changing these? Because we can't see that.
Right, and so I can break that down for you and email that to you.
Thank you.
So other than that, is there any questions, or do you want to go ahead and start going through the positions?
I went through all of them, so I don't want to go into a whole lot of detail as we're,
Right,
kind of
I don't
scrolling
need
through
to
the
either, Dana.
slides. But I just wanted to point out, I mean, it was a lot of information, so I did go through a lot of it, and it gave me an idea of, what was happening. I do want to clarify though, and this is going back kind of to the last meeting. So the market, COLA, and merit, the combo of it. So an employee, you would look at first, are they at market? And if they're not at market, they would first get their COLA or merit or both or whatever, and then you would apply the
Uh,
market? Or can you just explain that just one
Sure.
more time? So that
So the process that you take is you calculate the employee's cost of living adjustment because you want to provide that to your entire staff just because it is a cost of living that equates to inflation, cost of everything going up.
and that would shift all ranges.
So that's just when I say that employees their cost of living is being calculated. I'm referencing the employee's base wage.
Okay.
So you calculate their cost of living adjustment into their base wage, then you calculate their merit, like whatever score they got on their evaluation, into their base wage as well. And then as far as their new wage, with those two calculated into their base wage, then I go see if that employee themselves is at market versus their years of experience on the new pay range that the market whatever pay range we got in the market. So you give them their COLA, give them their merit, and then go see where they fall on the range versus their years of experience.
Okay.
And the whole point of the market is to say, okay, with all these different increases that we're giving, is this employee still at market? So,
So if the COLA merit are approved, like all three of them, like for instance, the water, they would still get the COLA and the merit. They just wouldn't get
the market.
the market.
That is correct.
Okay. And then also with the let me see how I want to ask this. So the ranges are not shifting at all with any of these increases. Is that correct?
Not with the COLA and merit, but with the market. And that's
The
what all this
market.
different
Okay.
data is.
Oh, okay. Okay. All right. I might have more questions, but I'll let
So,
Vice Mayor.
and the COLA was 2.9?
That is correct.
So you're talking about getting the COLA, getting the merit, which 90 of them seem to be exceeded expectations.
90 in total are getting a merit increase, but 90 didn't fall in exceeds. I don't remember the numbers, but we had several in meets, several in exceeds, and several in exceptional. Overall, with those three different categories, was 97 employees getting a merit. I think it was like 53 in exceeds. I could be wrong, though.
So I think I got it right with what the councilwoman said. You're applying the COLA, you're applying the merit, and then you're gonna see where they fall in the market.
Right.
And you don't know how many that'll affect. Because
We had 105 employees getting a market. After their COLA and merit, I have 105 employees getting a market increase.
which doesn't mean the full percent of these, what these reflect. It all
Right.
depends what makes the
Yes.
difference.
So what you're seeing on these slides is a pay range increase. That doesn't mean that the employee is getting that percentage of an increase.
Where do we take them to in the between of these two? How do you determine the difference between the minimum and the maximum?
So back to this table, so you figure out which range that they fall on, and then I have a spreadsheet where I have all the employees' years of experience that I update every year. So I find their pay range that they fall in, and then I find their step, which is 0 to 20 years of experience, and that is their wage.
So you've updated these already with the market
Yes.
update. So this that you handed out is already
Yes, so typically all I have to do as far as the pay ranges is usually like eliminate one or two, like pay level 1 and 2, because minimum wage goes up, and then add a few ranges at the bottom. That's generally all you have to do. Otherwise, we have 35 pay ranges, and I can usually find the pay range I need with whatever market average I get. So
So with like, I'm looking at the airport manager. So we just did this 2 years ago and we brought everybody up to market, correct?
3 years ago,
Okay.
we do
So
the
3
market
years
review.
ago.
Yeah.
So I'm trying to figure out what went where, because if we did this 3 years ago and everybody was at market for an airport manager, how did that go up 29%? Because I don't think
So and-
inflation went up. I don't see a city increasing just,
right.
I understand it's an average, but I just don't see in 3 years that we're 29% behind the minimum.
Councilwoman Brentner. So the airport manager is an exception to this whole, and I think it's one of the highest ones that came back. And so when we originally developed the airport manager position, myself and city management met to see where we should place that position as far as pay. And it was understood that the airport was pretty underdeveloped, and that the employee that we were hiring into that position didn't have airport, like they had pilot experience in the military, but not airport manager experience. And so we actually only used a pay range from, I believe it was Cottonwood because of those factors at the time. Now, this time I have 4 data points, and so that's bringing the range a lot higher.
Some of these are even high, like, not to call out B, I'm sorry, I was just scrolling through, but the minimum is 16.82%.
Yeah.
What did we miss? There's no way in 3 years that it went up 16%.
Yeah, actually, that is possible. If the pay range is going up 4 or 5% per year, and we are only doing this every 3 years, then that is very, very possible. But that's a hard question to answer because it's based on inflation. And it's based on what all the other municipalities are doing as far as their pay ranges, which, is hard to answer. But we keep up as far as employees' pay rates because even though we're only doing a market review every 3 years, we're still processing COLA and merits every year, or we have been since our last market review. Otherwise, this would have been a lot more expensive. But it is very possible for the market to fluctuate that much.
I don't see that. When we talked about doing this, we talked about, well, we don't want to lose a good employee to a neighboring town or one of our competitors, but I mean, and some of them we did Thatcher, some we did county. We're right on a lot of the time with county. Thatcher pays a little bit more, but I'm not understanding why are we pulling in all these other towns when it's just population that's smaller than ours. We don't know their tax basis. We don't know how much revenue they're bringing in. Why are we using those?
So I mean, we lose employees. We don't lose a lot of employees. Like our turnover is not super extreme right now, but we lose employees to other. We don't just lose them to local towns and cities. I mean, they're moving. We've had employees move to different cities and towns, different areas. So I don't think comparing ourselves just to our neighboring communities is reasonable. I think we need to have more of an average pay range to stay a little more competitive because we do have employees that leave to move out of town. So,
I would just like to see something more in line with what we have. Maybe our
and
tax revenue, our population type thing.
I think the reason that these cities and towns were chosen were based on population, assuming that those municipalities functioned similarly to us. So our population is, 10,000 and a few hundred, and we fall right in the middle of that. And so that's why you see, a few municipalities that are a little larger than us and a few that are smaller than us. But it's, like I said, to get an average pay range, help us stay competitive.
And I,
Danielle, when you did the study or the market adjustment 3 years ago, are these the same cities and towns that you used for that
They are,
study?
and so myself and the former city manager and the former finance director met, and we came up with a sample of entities, and then we brought those entities to council for discussion and direction as far as who should we, compare ourselves to, and that's what city management and council came up with last time, and so I stuck with the same entities. I don't necessarily recommend changing entities very frequently. If you change your sample set and your benchmarks, it causes pretty significant fluctuations in the wages that you're paying your employees. So once you choose a set, I mean, you can make small adjustments here and there, but you don't want to
Right.
take a completely different process every time you do the market review, or you're going to have too many fluctuations in wages.
And just a comment, I'm okay with the samples that we're using here, but Stafford has all 3 utilities. We have a golf course, we have a landfill, we have a lot of positions that are unique to us. That does I think need to be considered when we're looking at a lot of these comparisons.
Right. And so, and so what I can offer is the next time we do a market review, we have another work session and kind of go through it and fine tune it. If we need to add a few entities, we can. So, yeah.
I was going to make that point too. We've been having this discussion for a long time, which entities to use for our comparisons. It's been a subject of debate since the beginning. And what we've come up with, or what we've been using, I don't think it was ever an action item, but it was council directed.
Yeah, I'm pretty sure I'd have to go look at the videos, but I'm pretty sure we had a work session and had discussions, and I think we made a few adjustments based on how that meeting went, but I'd have to go watch the video again to kind of figure out what happened.
Do you have the overall number that if this market increase goes through, how much that is going to increase that we have to pay?
I believe it was 1.2 million? 1,022,000.
1,022,000.
Keeping in mind that takes care of COLA, merit, and market.
That's 1,022,000 in on top of, do you have the amount we're currently paying?
In overall wages, do you have that amount?
So if somebody's topped out and they aren't getting market, they're still eligible for the 4.4.
So if an employee tops out, keep in mind that they still receive their COLA and merit in the form of a lump sum
Four.
check.
That's the 4.4.
And so typically I have between 15 and 20 employees that are red circled, but because we haven't done a market review in 3 years, I'm pushing about 30 employees that are red circled. And so, I'm hoping that this gets passed because that'll get that all cleaned up.
So if they don't qualify for market, they still get 4.4.
Depending
Yes,
on
well, depending on their
review,
merit.
depending on their evaluation.
I'm using the 1.5 for the excess, but now we compared and we were very adamant about comparing to other cities and towns to make sure we were fair. The impact on the budget with the health that just went into, and we didn't compare that to anything. In fact, all through the state, nobody does that, maybe one other. We weren't concerned about comparing that at that time, and we just did it. So that's another thing we've got coming out of the budget now. But I want to make sure those that don't get a market are still being treated fair.
So the finance,
That's where the 4.4 come in with my question.
I see. So the finance director confirmed we pay 12.6 in salaries right now, so that would increase by the million if this is passed.
'Cause we don't know the whole impact yet of all this. We were planning, we were doing planning on this and holding it at 90-10. So now there's other things to look at.
Danielle, can you tell by these market reviews if these other cities and towns have done a market review? Is that what's changing this? Instead of being 9%, it's 16 or?
Being that all the pay ranges have increased since our last market review and taking the same process, the fact that most of our ranges need to be increased to be at market, that does tell me that they're increasing their ranges. Every municipality, has a different compensation process, and I don't know their exact processes, but it does tell me that their ranges have very obviously increased compared.
It's not really a matter of inflation times 3 years. It's when everybody else caught up and then when we looked at their data is what's making it look skewed. Does that make
Possibly.
sense?
I mean, like I said, I can't speak to all those different entities and the process they're taking to increase their ranges. But obviously their ranges have increased, and that's why our ranges are falling behind, is because, we do these market reviews every 3 years, and it's been 3 years.
Thank you.
So with this market review, we're talking about pay. Well, we're now paying 100% of their health care. Did you factor that into these new levels?
No, Councilwoman Bratner, just because we're paying the insurance doesn't change the actual market data and where the range falls in the market.
Well, It kind of does because these other towns are not paying 100%. So they are receiving more of a benefit with this.
If you want to look at it that way, you can, but also that could stand true for when we were paying 90/10. I mean, not all of them were paying 90/10. Some
Right.
are
And
70/30.
we also don't know all the other benefits that they may or may not provide.
Right.
Right.
That's what I'm getting at. We don't know what these numbers
Right, in both
entail.
directions.
Right.
Yeah, so you do the best you can to match.
Is there an overall percentage that you're taking? Like, I'm increasing this amount, or you're going based off of these ranges? I'm just trying to get a number of, like, maybe 3 years ago, we had to increase everyone up 8% average. What is,
The average pay range increase is 8%, but that's just an average. Every range is going up different, and so the process is I get that survey average range and then simply go choose our closest pay range, because you have to choose from our ranges, being that we have a 20-year spread. And so we can usually get it pretty spot on, but we have a 20-year spread. It doesn't mean that other entities have a 20-year spread.
so whatever the survey average range is, that's what you make our minimum? So like our pay level 1, step 0, that's the new minimum amount?
So we have positions that are entry level and close to minimum wage. So minimum wage in Arizona right now is $15.15, and so I eliminated our pay range 1, which started at 15, and just went with our lowest pay range starting at 16, because we're trying to stay ahead of minimum wage. So that's how my pay range 1 is set, is just keeping up with and staying ahead of minimum wage. And then it's usually $1 in between each, 50 cents to $1 in between each minimum for each range. And that's, like I said, we have 35 pay ranges, and I can, within those 35 pay ranges, usually choose a very close pay range to the survey average.
And how does this work for your part-time employees?
They still fall within whatever pay range their position falls in the market. And I mean, they're just paid a base hourly rate, so they make half as less as a full-time employee. But that doesn't necessarily change based on the market just because they're part-time. So if their range comes back 30 to 50,000 for that position, whether they're full-time or part-time, it doesn't affect their rate per hour.
So they would just receive half of what is showing here.
Yeah, because when you build an employee in the system, you're building them at, well, I mean, they're doing their timesheets, so they're talking, like I said, it doesn't affect their hourly rate. They just make less because they're clocking less hours.
So with going 100, that's going to increase the take-home pay. But I'm more concerned about what shows up on the base pay, because that increases retirement, Social Security, the stuff that eventually some of the younger people don't really look at at this time. And that was kind of the goal I was looking at this year with going the 3-year plan. That was my plan, but it got kind of messed up with the other factors.
Does council have any other questions or want to see any specific positions?
Oh, actually, did that 1,022,000, did that include taxes, retirement, everything? That's everything that we would be paying, that's the 1 million?
Yes, it included all EREs.
And the 12.6, that covers same thing, retirements, everything? That's just salary. That doesn't count how much we pay towards their retirement. Because do we match 6%?
Thank you.
Okay, then we'll close the work session and reconvene into our regular meeting. Number 9, announcement of current events. Number 10, request for future agenda items.
I think in light of all the changes, when we had a city manager change, a finance director change, council change, I'd like to see a policy come forward maybe for the market rate study. So if you were to leave, Danielle, then whoever steps in already has a policy, because I know direction can change. We could give direction one day, feel one way, and then the next day, we have different people on the council that feel a different way. So I'd like to see more of a policy so that we've got something that we can refer to and say, look, this is what we use. So I'd kind of like to see that. I just want to circle back again. I'd like to see us bring in the outside entity to help Troy get caught up, since we've finished the audit now and we can get all of our reports up to date. So I don't know if you have that on future agenda, but I asked last time. So I just want to reiterate that same one.
Mayor, Councilwoman Bratner, so we do have that on the radar. It's on our notes for future agenda items. Also, to address your first request, we do actually have a compensation plan that was adopted in 2023 by resolution. We can provide that to the whole council if you'd like by email.
I asked for it and it was just a side note in there. There wasn't actually a policy stating who we're going to use and that type of thing.
Okay, I'll send you what I got.
Thank you.
Anybody else? If not, we'll move on to item 11.
Mayor, move that we adjourn.
Second.
We have a motion and a second to adjourn. All in favor?